right now, up 1.5% in trade today, followed by Bharat Petroleum as well as Maruti Suzuki. Both of these counters up 1%. Some of the counters that are under pressure, you have Asian Paints, Britannia and Trend, some of the consumer and FMCG names. They're all seeing cuts of 0.6 to 1%. When you look at the advance decline ratio, if you can just pull up that for the Nifty 50, well, you have 30 advances versus declines of around 20 stocks, and you can see how that's move throughout the day. But Anushi, how are broader markets performing? Underperforming or outperforming the benchmark?
Definitely underperforming, Mihika. It's not a great day for the broader markets if we see, while the benchmarks have remained flat on the day. We are seeing a lot of weakness in the small cap and the mid cap indices. In fact, we are seeing about a 0.5% of a cuts in between both of these indices. If you look at, let's just pull up the Nifty mid cap index and see how it is doing. What are the top players that are leading to this drag that we are looking at the indexes? We have names like Cummins, Bandhan Bank, CRISIL seeing about a 3 to 4% of a cut in the day, while what's also leading to the gains in the indices, let's check that as well. There's GIC, there's Mazgaon Dock. Mazgaon Dock has clocked in about a 4% of gain. Honeywell Automation about 3.4% of gains that we are looking at. This is in terms of mid-cap space that we are looking at, but let's also address the small cap indices. So in small cap, again, we are looking at a 0.5% of a decline, but this is led by some counters. Like if we can pull up the small cap 250, what is leading to this loss that we are looking in the indices? We have names like 361, Aarti Industries seeing about 1% of losses, while Chemplast, Hindustan Copper, Titagarh in pressure, seeing about 3 to 5% of cuts in the day. What is interesting though is counters like Intellect Design, 11% of gains that we are looking at. Even in the Monday session, we had seen this counter recording strong set of gains, but again in Tuesday it was in pressure due to the correction which took place. Blue Dart, Kfin Tech, J&K Bank all pulling up the small cap 250 index despite the weakness that we are seeing in trade today, 4 to 8% of gains. Well, this is in terms of how the broader markets are looking like, Mihika, but let's talk about the queries for the day, right?
Let's get on to that. And, we're going to take our first query, and this is from Shashwat from Dehradun. Now, he's currently holding 20 shares of Garden Reach Shipbuilders at a price of 1,796. This is much higher than what the stock is trading at. Kush, I'll come to you first. He's asking whether, he should hold his position or sell his stake. He's currently at a loss of roughly about 4,000 rupees.
Hi, sir. A very good morning to everyone. Well, the stock is actually, done rather well. If you see in the last 15, odd days, it's just that the last 3-4 sessions have seen some profit booking in line with the markets. It's holding on to the 200-day moving average support zone as well very dearly. The volumes on the way down are thin, so which is an encouraging sign. So my suggestion on this would be a hold. However, I will suggest a positional stop loss at the 1515 level, which is a medium-term support zone for this one. If that is taken out, then the stock could retest the recent lows of 1380 as well. So continue holding on to this one for for some time, let's say a month or two, and the positional stop on this one comes in at 1515.
Well, that was on the view of Garden Reach that we should be looking out for. But next we have a caller joining in with us. Jitendra Ajay from Andhra Pradesh wants to know whether this is the right time to buy Motherson or not. Jitendra, I hope I'm audible to you.
Yeah, madam. Good morning, madam.
Yeah, can you please state your query?
Madam, I am very much poor in English, but I will manage. Please understand.
कोई बात नहीं, आप हिंदी में बात कर दीजिए.
हाँ, हिंदी ना, हम तेलुगु का. So, I want to buy Motherson Sumi wiring right now. Is it a good time to buy?
Do you want a fundamental view on this or a technical view?
Fundamentals, okay, madam, but technical view, what will be the future of this stock?
Okay, Kush, let me come to you on this one. What is your view? Is this the correct time to buy Motherson wiring shares?
I would wait out a little. The silver lining is that despite the kind of sharp downfall that the stock is seeing, there is a positive divergence building on the daily setup, which is suggesting that the selling pressure, at least from the near-term perspective, might be coming to an end. But that is the divergence telling you, and so we need a price confirmation as well for this. So my suggestion would be to hold up on that buying. Once the stock crosses the 61 threshold on the upside, is when you should consider buying, and the stop loss in that case will be 57. So for these levels, you could continue to hold because any kind of a bounce back could be quite sharp, and the first target on the way up for the stock could be 65, and then you're looking at the 68 as well. So hold up on the purchase just yet. Let the price tell you that the bottom is indeed in place. We're getting some technical suggestions that it is perhaps coming to an end. The fall is perhaps from a near-term perspective coming to an end. Let the price tell you that. Above 61, go ahead and buy with a stop loss of 57.
Thank you so much, Krish, for that. Jitendra, I hope your query is answered. Krish has stated that about the 61 level, it would be a good, call to buy. But, let's move on to our next query, and this is from Thiago, who is from Tamil Nadu. He's holding 300 shares of Bharat Electronics currently at a price of 280 a piece, and he's asking whether he should hold or sell his position. Nirav, I'll come to you. From a fundamental perspective, do you think Bharat Electronics is more, driving it in the future?
Thank you so much for having me on your show. Good morning. I think Bharat Electronics definitely it's a hold at this point of time, and I think the investor should even consider adding to some of his positions, because the performance of Bharat Electronics has been quite consistent. They've managed to beat their expectations. They have reported very good margins. The order book has been growing very, very consistently. So I think there is a very strong possibility that the stock might be an outperformer in the near future. So I think it's a hold, and if possible, one can even add or build on to the positions from these levels.
Okay, so hold position for this counter that we are looking at. Next, again, we have a caller joining us. Kunal is our next caller from Chennai. Hi, Kunal. I hope I'm audible to you. Can you state what your query is?
Yes, hi. Good morning. So I have 500 shares of Lancer Containers, and I was actually looking at a long-term view or a short-term view, because I saw this share somewhere. And after looking and looking up the financials, I had made a purchase, but then it's been range bound since then. So just wanted to call on this. Thank you.
Kunal, can you just help us know since when have you been holding the shares of this company?
Maybe 15 days, around 15 days.
Okay, so 15 days, and you want both the fundamental and the technical view on this, right?
Yeah.
Okay, Nirav, first I'll come to you on this one. What do you think? He's just bought this position in the last 15 days. If you can talk to us about Lancer Container, what's your view on this stock?
Yeah, so I think 15 days is just too short a time frame. But I think if one were to look at it from, say, a 6-month to a 12-month perspective, then I think one has to wait for the operating environment to improve, because we are seeing in EXIM trade there are certain headwinds at this point of time. There has been some shortage of containers, the Red Sea crisis, etc. So I think it would be better to hold the position and then see what kind of quarterly results are reported by the company, and wait for another quarter at least before taking a decision on what would be the next course of action. So I think it's better to wait for at least 6 months before we decide on the next course of action.
Okay, so wait for 6 months for this stock. Kush, quickly coming to you on this as well, since you wanted a technical view also. What is your view on Lancer Corp?
So after a fall from those 100 levels, all the way up until 30, the stock is attempting a recovery now, but it's not really as significant just yet. But there are early signs. So my suggestion would be hold it with a stop loss of 33.50, and on the way up, you could actually look at targets of 41 and 45. If this recovery does come into play.
Thank you, Kush. Let's move on to the next query. This is from Nagaraju, who's from Bengaluru. He's holding 100 shares of Coal India at a price of 453 rupees per share, and he's asking what he should do next. Currently facing a loss of 6,000. Nirav, I'll come to you. Coal India, the energy space. What's your outlook? Could this stock recover from its levels?
Yeah, there is a strong possibility that the stock can recover in the near future. But I think at this point of time, we have the winter which is there in the country. So the demand for coal tends to be a little bit on the subdued side. But I think come summer, and we will have the power plants which will be buzzing again, because the demand for power will pick up. And Coal India is the predominant supplier of coal, and coal is the predominant form of energy. So I think one has to hold with a 3 to 6 months horizon for better results to emerge.
View for Coal India. Next, we have Adarsh joining us, the next caller from New Delhi. Hi, Adarsh. How can we help you? Okay, till the time that others joins us, we'll take up the next query, and this is from KP Singh. He's holding about 3,900 shares of Vedanta, and this is at a price of 340 a piece. Nirav, I'll come to you whether he should continue to hold this or sell. There's a lot in cards in terms of Vedanta. Demerger definitely on the news. So if you can give us an outlook on this one.
Yeah, this is definitely a hold considering the pedigree of the company and considering the fact that it's such an asset-rich company. They're doing the right restructuring, also all the right steps being taken by the company. So I think this is definitely a hold from the current levels.
Thank you so much, Nirav, for that. So hold on Vedanta, some multiple triggers going forward. But the next query, we have Vel Shankar, who's holding 400 shares of Vishal Mega Mart at a price of 104 rupees a piece, and he's asking about what to do next. Khush, I'll come to you. How does Vishal Mega Mart look on the chart? Should he hold or sell his position?
Well, it's a very recent listing, so very limited data, so I'm afraid I'm going to have to toss it to Nirav.
Nirav, outlook on Vishal Mega Mart.
Yeah, so I think they've given a very confident outlook in the near future. But having said that, I think it will be advisable to hold at least. Let's wait for a couple of quarters what kind of growth outlook they are giving going forward. So I think one must take the decision to hold. But at the same time, we are seeing very divergent trends in retail because DMart has been under a lot of pressure. We are seeing the players like Shoppers Stop, etc., continue to face a lot of headwinds. But I think Vishal Mega Mart, since it's a new listing, I think it is advisable to wait for a couple of quarters and then take a decision.
Thank you so much, Nirav, for that. The next query we have is from Suman Roy, who's holding 100 shares of Axis Bank at a price of 1,150 a piece. And, he's asking whether he should hold or sell. Currently facing a loss. Khush, I'll come to you from the technical side. Fundamentally, we've seen a lot of traction from, different analysts, talking about how Axis Bank, is performing better from peers. But from on the charts, how does it look? Because the person asking the query is currently facing a loss of over 6,000 rupees.
Well, so the kind of bounce that we're seeing right now are actually mainly from the oversold territory side. I'm not sure if the fall is entirely over because if you see the volumes on the way down, they've been quite staggering, or maybe at least up until the averages for the last 20 days, and or the volumes on the way up haven't really matched as much, which is suggesting that the buying interest hasn't really kicked in. This is too early to call, a bottom in place for this one. My suggestion would be that, if you can, then perhaps hold on to this one with a stop loss at 1060. It's a slightly deeper stop loss compared to where, the stock is right now, in the sense that, his loss might deepen, but it will give him an opportunity to see if the stock indeed does rebound. So hold, but with a stop loss of 1060. If that is broken, the stock could actually head to 1020 levels also.
Hold on Axis Bank is what Kush is saying. But as we talk about the big players of 2024, we have the top 9 stocks in focus. And this is with the expectations of highest upside that we could be seeing next year. Harsh joins us with more details on these stocks.
12-month upside, 30% plus. It's so unlikely that Nifty 50 comprises of 9 stocks having a 30% plus upside. I'm not sure how or where the Nifty will move if all of these target prices are hit, but that's for another day. Let me first start off. First one, Adani Enterprises, 82% upside. This is the average analyst estimate as per Bloomberg. All analysts combined, average target price, and therefore the average upside. 4255 is the target price on this one, an incubator company of sorts, but also the kind of negative returns that it has given has led to this kind of upside that we are seeing currently on the stock. IndusInd Bank, 52% upside, again negative to the Q2 numbers. We've seen IndusInd Bank therefore give us a 52% upside. A lot of analysts suggesting that a lot of the pain has already been built in. That's what it seems like. Third one, SBI Life, 42% upside from here, target price 2,000 rupees. With everything that's happening in the regulatory space, SBI Life has seen a bit of a tapering on the stock performance side, which is what has led to this upside potential. Adani Ports, 41% upside, 1,682 rupees is the target price. the number one ports operator in the country, also a Nifty 50 counter, available with a 41% upside possible. Coal India is the fifth on the list, 40% upside. Now 5 stocks on the Nifty having a 40+% upside. This is the other possible headline to take on this one. 536 rupees being the target price. The largest coal miner in the country, 70 to 80% market share in domestic coal is what this one has. Tata Consumer, 34% upside from here. A Tata Group stock, 34% upside, 1211 being the target price. NTPC, the largest thermal power generator in the country, 34% upside from here, 446 rupees is the target price on this one. Tata Motors, another Tata Group company, 32% upside, possibly the twin engine of PV and CV starting to play out, likely, hopefully should start playing out on the stock price as well, 956 being the target price. ONGC is the last one, 31% upside, 317 being the target price. Again, not sure where the Nifty will be if all of these target prices are hit.
Thank you, Harsh, so much for giving us, all those details. Let's go to our guest. Nirav, I'll come to you first. If you had to, take your top 5 big ideas for 2025, since we've spoken about the Nifty, within the Nifty, what would they be?
Yeah, actually, from the list which we have discussed, I think we'll like a few ideas from there itself. So I think Adani Enterprises looking quite good. As you pointed out, this is an incubator firm, and it has got exposure to various businesses. One is of course the ANIL, that is the Adani New Industries Limited. There is exposure to mining, there are highway projects, and most importantly, around 8 operational airports. Navi Mumbai International Airport expected to be operationalized. So I think the cash flows will start coming in, and I think the quality of earnings is likely to improve. So that remains a key monitorable going forward. So Adani Enterprises is a good story at this point of time. The second would be, of course, Adani Ports and SEZ, because they too have around 15 operational ports, and strong cash flows being generated, a very big contributor to the cash flows as far as the Adani Group is concerned. Third, I think we would like to look at Reliance Industries, because I think while they've been facing certain headwinds in the retail businesses at this point of time, but I think O2C, that is oil to chemicals, is starting to make a comeback. And I think we should see relatively better quality numbers going forward as far as the O2C business is concerned. And we could also see some improvement in the telecom side also, because the ARPUs have improved, although they are facing some problems on the subscriber front. But overall, I think Reliance Industries is also looking quite good going forward. The fourth, I think we would like is HDFC Bank. It's looking quite good, has the leadership mantle as far as the banking sector is concerned. And I think we would like to have a look at Coal India Limited, because come summer, and I think the coal demand is expected to start moving up, and it has virtually a monopoly status as far as coal supplies are concerned. So I think broadly we would like to have a look at these stocks. They look attractive at this point of time.
Thank you so much, Neil. So Coal India and HDFC Bank, Reliance Industries, and Adani Enterprises and Adani Ports. A standard disclaimer, viewers. The NDTV is a subsidiary of AMG Media Networks Limited, which is a part of the Adani Group company. But Khush, I'll quickly go to you. If you had to, pick your top 5 big ideas for 2025 from the Nifty 50 pack, what would it be? And do you have a specific Nifty 50 target in mind? What we could see in 2025 in the last few weeks have been somewhat tough for the benchmark.
Mika, we are in the works, and we're about to finalize that report also for the next year. But I can give you a heads up in terms of the stocks that we are looking at currently. The common ones in the large cap names, between myself and Nirav, are Reliance Industries and HDFC Bank. Reliance has had quite a bit of fall already, but on the daily charts, you're starting to see positive divergences. So from a near term, it could be that the selling is over, and after this kind of a sharp correction, it makes an interesting buy on a large cap name like that. And exactly opposite, end of the spectrum is HDFC Bank, which hasn't really performed but has picked up steam now. So these are the two stocks which are common from the large cap names. Now, as far as the mid cap, small cap names go, couple of stocks that we've discussed quite extensively on the channel before. One of them is Skipper. If you've seen that, the kind of moves that it has made, it's already a multi-bagger over the last 3-4 years, and we still remain very bullish on this. In fact, the correction that you've seen from 650, 700 odd levels is actually quite a healthy one. It should be taken as an opportunity to accumulate. And also PCBL. This one too has had a good run, seen a round of profit booking, but after a good base formation in place, it's on the way up. So we are looking at some of these names. And as for the Nifty target, as I said, the report is in the world sale. We'll come back with an update shortly on that.
Okay, so Skipper, KPCBL and other stocks and radar in the mid and small cap space. But with that, let's go across to the queries again. We have a caller joining us, Govind Kumar from Hyderabad. Hi, Govind. Please, can you state your query?
Yeah, ma'am, I am brought at KPIT technology at the rate of 1661 to 1 number sales. Can I add it somewhere or else book losses?
Okay, can you state the timeline at when did you buy these shares? What was the rationale behind
I'm holding at least horizon is 1 to 2 years. 1 to 2 years.
Okay, so do you want a technical view on this?
No, I am long-term investor, ma'am.
Long-term investor, okay. Nirav, coming to you for KPIT Tech, what is your view on this, whether he should continue to hold or sell the stock?
Yeah, I think it's got good long-term prospects, so I think I should keep the faith and hold with a medium to long-term perspective.
Okay, so continue to hold it for a long-term perspective. But with that, it's time to slip into a short break. More stock queries remain on the other side, so do stay tuned in.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show where we get all your queries sorted. You can reach out to us on the numbers flashing below on WhatsApp, or you can even call us. But let's take the next viewer query for the day. It's coming from Rachit, who's holding 63 shares of Zomato at a price of 250 rupees. He's currently at a 1K profit, and he's asking about what to do next. Nirav, I'll come to you. Outlook on Zomato, playing the digital quick commerce theme, and what more?
Yes, I think it's a clear-cut hold, and I think the recent inclusion in the main indices, I think, also augurs well for the stock. So I think the advice from here is to definitely hold and keep adding some more quantity if in case there's a decline. So I think it's a clear-cut long-term hold.
So clear-cut long-term hold from Zomato. But up next, we have a caller, and this is Rahul from Chennai. Good morning, Rahul. Could you state your query for us?
Yeah, good morning, madam. Hope you are doing well.
Yes.
Yeah, I have a query on Goodluck India, madam. I am holding 200 share at 98 rupees, and I bought it in May 2021. So when I have bought it, it was at trading at around 7p. But currently, if you see, it is trading at 20p. And the thing is, when I have invested, the top line was around 1,500 crores, but now it is around 3,000 crores. So we can see in 3 years, it's growing around 30 to 33%. And recently in Jan 24, the company has also initiated a QIP of 200 crores for some of the amounts they will be using for. They have also made a subsidiary in August 23 for defense and aerospace limited in the company in the field of defense and aerospace. And I have also seen the management commentary in your channel itself. I think Neeraj sir has interviewed the management. So again, the company promoter is holding 55% and retail is participating around 27%. And if I see in the financials, there is one HNI investor like Sage Investment who is also holding 1 to 1.5% holding 2 lakh shares at 617. So my question is, can I also further invest more in this company, considering it is trading at 20p and the company's sector P is I think 30 to 60. Okay. So I feel it's an undervalued stock, but you can give your views.
Yeah. First of all, Rahul, I'd like to congratulate you because you made Goodluck has turned out to be very lucky to you. It's trading around over 930 rupees right now, and you bought it at 98. I want to know, is your concern mainly on valuations or a general outlook when you look at adding your position?
Yeah, I think, madam, it's on valuation. I feel it is still undervalued considering because it's at 20p only. Yeah. But if you see sector-wise, and they are ending defense also in the flavor as a new in the their book. So that's why I thought, like, can I invest more in this?
Okay. Then I'll go to Nirav. Nirav, Rahul has bought Goodluck at a price of 98, and he's concerned about valuations. He's looking whether he should add to his position, and it's clearly he's been holding it for a long time now. What's your outlook on Goodluck?
Yeah, so I think first of all, I congratulate Rahul for all the good research, the deep research which has been done before initiating a buy on the stock. And I think continue the good work, and I hope it continues to bring good luck to you. So but yes, from a valuation perspective, as you rightly pointed out, it was trading at a 7 PE multiple. Currently it trades at 20 PE multiple. But it's very important to note that PE multiple is associated with growth. As you go, as the chances of profitability increase, as you keep on going, as the prospects keep on improving, the PE market keeps on revising the PE growth multiple upwards. So I think it should be viewed as a positive sign. And I think the kind of areas which they are targeting, as you pointed out, defense and aerospace, these are the areas where you have a huge amount of entry barriers. It's not easy to enter these areas, and these businesses require a huge amount of perfection in terms of execution. So I think you have to wait it out for a couple of quarters to see how they are performing with respect to these particular areas, and what is the order book, what are the kind of orders which they are executing, and more importantly, it will be important to monitor the margins. If they are able to improve their margin trajectory, then I think the operating leverage will improve, cash flows will improve, and consequently the valuations too will improve. So I think it's advisable to hold this stock from a medium to long term perspective.
Okay, so a hold coming in for a medium to long perspective for Goodluck, and very interesting query that was, in fact. But moving on to the next query is from Jai Kishan Gwalior. He's holding about 1,000 shares of Adani Wilmar, and this is at a price of 350 a piece. Whether he should continue to hold or sell. Kush, coming to you for this one. What's your outlook on Adani Wilmar?
Well, he can continue to hold. I mean, the stock has seen quite a bit of a sharp downturn, but if you see, yesterday, day before, the couple of sessions, the stocks actually recovered quite well. And the volumes on the way up were very very encouraging. So I think this upward momentum could well continue. However, I would suggest a stop loss near the 300 level. If that is taken out, then perhaps the stock could slip further. So continue holding on to this one, but keep a stop loss around the 300 mark.
Okay, standard disclaimer on your screen. NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company. But on to the next query, if we go on, this is from Nambiar from Kerala. He's holding about 300 shares of RBL Bank, and this is at a price of 257 a piece. Again, whether continue to hold or sell on this one. Nirav, coming to you for a long-term outlook on RBL Bank.
Well, I think it would be advisable to shift to some better alternative. I think personally would recommend something like a federal bank. It would be a better alternative to shift over there.
Got it. So a sell on RBI Bank, advised to maybe shift to a different bank if you want the exposure in the BFS segment. But moving on, we have our next call, and this is Ankit from Raigad. Good morning, Ankit. What's your query?
Good morning, ma'am. Actually, I have Dixon Tech 14 shares at rupees 3415 a piece, ma'am.
Okay.
So I wanted to know if I can hold it for some more time or book some profit for ma'am.
And for how long have you been holding this position? What was your initial rationale?
Around 4 years, ma'am.
Okay,
around 4 years. I mean, investment it is a long-term bet, ma'am. And actually, I have taken this share before it has been subdivided or taken the split, ma'am.
Got it. First of all, congratulations, because the stock is currently trading at around 70,800 rupees, and you entered at the 3,400 level. Nirav, I'll come to you. We have a long-term investor for Dixon Tech, again holding for a period of 4 years, significant gains on his position, and he wants to know whether he should hold his position a little bit longer or what to do next. So what's your view?
Yes, I think unless it is necessary to raise some funds, I think one should hold on to this position because of the fact that we are looking at a very explosive growth as far as this entire EMS space is concerned. So I think definitely you should hold on to the position.
Okay, so next we have a caller joining us. So this is Chandan Jain from Karnataka. Hi Chandan, can you state your query for the viewers, please? I think there's a disturbance. Chandan, can you hear us? Okay, so just taking Chandan's query into account, he's holding about 60 shares of Kfin Tech, and this is at a price of 700 a piece. His query is whether he should continue to hold or sell this stock. Kush, coming to you, what is your outlook on Kfin Tech? We've addressed this earlier in the show before as well. If you can just reiterate what was your view.
So depending on his horizon, I mean, if it's a short to a medium term kind of a position, then not a bad idea to book out partially and then accumulate it again closer to the 1400, 1450 odd levels. The reason being that while the stock is on a very firm footing, even we've discussed this stock as a call a couple of times, on the channel, couple of times. The target 2 has also been hit. That's the kind of momentum that the stock is in. However, on the daily and the weekly setup, the stock is nearly overheated territories, and hence perhaps could see some sort of a pullback. Hence, the suggestion is to book it partially and add again on declines closer to the 1400, 1450 mark.
Okay, got it. Thank you, Kush, for that. Your next query is from Metin Khan, who's from Chennai, holding 1,200 shares of NMDC at a price of 242 a piece and asking for the outlook of what's next, currently facing a loss of 32,000. Nirav, I'll come to you. NMDC does, from an iron ore miner perspective, have some advantage, but there have been significant headwinds. Commodity-based company, certain Karnataka, potential mining taxes. So what would be the outlook for NMDC? An exit on this position, or some hold? Could the person hold for some recovery?
I think it will be advisable to exit the position because of the challenges which we are facing at this point of time, the headwinds, and as you rightly pointed out, the Karnataka government has tabled this bill where they want to increase the royalty, etc. So considering the kind of volatility, I think it will be better to shift to some other player like a Tata Steel or a JSW Steel, etc.
Okay, so that's on the view for NMDC. Nirav, I'll stay for you for the next query as well. Next query is from Satish Kumar. He's holding about 200 shares of Cummins, and this is at a price of 3,610 per piece. Wants to know whether he should hold on to this one or sell it. Nirav, a lot happening in Cummins, new guidelines, new emission norms that the company has to adopt to. Along with that, there would be concerns about its margins, growth picture forward. Can you give us an outlook on this?
Yeah, actually, two angles to look at this. One is the CPCB norms, which you pointed out, the Central Pollution Control Board norms. I think the 6th version is now applicable, and so I think a lot of upgrades will be required at this point of time. But from what we are hearing just now, I think the demand conditions continue to remain quite muted. So I think the capital goods space overall has been under some sort of pressure. First, we saw Siemens, which has corrected by 13% in the last few trading sessions, and today, as we are talking, I think Cummins too has been under pressure. I think the stock was down about 3% on last count. So I think from that perspective, it's better to take some profits and then maybe consider re-entering at lower levels.
Vedanta, our next question is from Jayakrishnan, currently holding Ultratech cement at a price of 11,894 a piece. Kush, I'll come to you first. 400 rupees below, the holding price. What's the outlook on Ultratech cement? It's a large cap player, the largest player in the market, but from a chart perspective, could we see more of an uptick?
Sure. So while the recent about week to 10 days odd price action is on the downside, let's not forget that this is on the back of what the market has been doing. Before that the stock was actually recovering rather well, and we've seen some traction in the cement space already. So my suggestion on Ultratech would be a hold, given the kind of uptick that the stock had begun. Even now, if you see the stock is taking support near the 50-day moving average, if the risk appetite is there, then 11,000, that's the level where you should keep your stop loss. If that's broken, then the structure would perhaps fizzle out. But there's a possibility that once the market stabilizes, the stock could resume its uptrend. Now, on the way up, I'm looking at a target of 12,000 as the first level where the stock has actually attempted 3 times to cross, but hasn't really been able to. So that should be the first key level to watch for. But I think once that is taken out, you're looking at a 12,500 as well as a very realistic target. So with a stop loss of 11,000, continue to hold Ultratech.
Okay, continue to hold Ultratech. That's a view coming in from Kush. Next, we want move to the gas space, gas stock space, and this is next query is from Vimal. He wants to understand the outlook on Indraprastha Gas Limited. Nirav, coming to you on this one. In the last 6 months, 1 year, we've seen the stock underperform the markets. Can you share your fundamental view on this?
Yes, recently I think we've seen a lot of pressure as far as the city gas distribution companies are concerned, predominantly Indraprastha Gas, Mahanagar Gas. There is a possibility that their margins are likely to get squeezed in the near term. But I think we've seen a sharp correction, and now the stocks are on the comeback trail because of some tax reliefs, etc., which are there in the offing. But I think it would be better to wait and watch at this point of time. Wait for one quarterly results, see their commentary, what they are up to, and then take a decision whether to enter or not.
Got it. Thank you for that, Neerav. The next query is from AM Reddy, who is holding 800 Wardwizard Innovations stocks at a share price of 56 a piece. Kush, I'll come to you. He's asking whether he should add or hold his position.
Sorry, what's the buy price?
Okay. Okay, we have AM Reddy on the caller. Okay, so no, he's asking whether he should add or hold his position in Wardwizard Innovation. He bought it at 56 a piece, 800 shares.
Well, I'm afraid the outlook on this one is actually quite negative. The stocks actually had quite a stellar downward move ever since it hit that 85 odd mark. There isn't really a sign of a recovery on this one, even though the investor is in quite a bit of a loss. I would suggest an exit, on this one, because as I said, there's very sharp downfall, and even now on the way down, the volumes are sort of peaking. So not a bad idea to exit this one and perhaps look for an alternative.
Very bearish outlook for Wardwizard Innovations that we are looking at. But next we have a caller joining us. Gopal Krishna is joining us. Hi, Gopal. Can you state your query for us?
I'm holding 20 shares of Bombay Stock Exchange, BSE.
Yes. Can you state from when you are holding this? What was your rationale behind holding the stocks?
I started acquiring it in 2020. 2021, I closed it. Around 830 rupees is my average price.
Okay. So I believe that you want to understand the fundamental view on this stock, right?
No, I wish to know whether should I hold it or sell it, or if I can hold it, can I add more?
Okay. Neerav, coming to you on this one, BSE around 830, he's holding it from a long time of frame. So can you share your outlook on BSE?
Well, this is a concept stock, and I think he's bought it at the right price. So I think there's no question of selling it. It's a hold from a medium to long term perspective.
Okay. Got it. Thank you for that. So hold on BSE. The next query is from D. Mazumdar from Rourkela, and he's holding 15 shares of Amber Enterprises. We have him on call. Welcome to the show. Could you state your query and the rationale and your position in Amber Enterprises right now? Your query, exact query. What's your position in Amber Enterprises right now, and what was your rationale when you bought it?
Yeah, you see, I bought it because at that time it was means it had come down quite sharply, and it was one of the main companies which catered to the refrigeration industry.
Got it. Neerav, I'll come to you. Oh yeah, go ahead. Sorry.
So I bought it now. Now that it has appreciated so much, and there is a talk of demerger of its electronics manufacturing division. So what should I do? Should I stay invested, add more, or sell partially?
Okay. Neerav, I'll come to you. There's been talks about, Amber kind of electronics division kind of getting demerged, and what's your outlook? Significant gains that caller has made right now. What's your outlook for Amber Enterprises?
Yes, I think continue to hold for better gains. That is one. And I think the markets have already given a thumbs up to this proposal for the proposed demerger. It's likely to unlock a lot of value. So I think he should continue to hold on to the position.
Okay, so hold that we should be seeing in terms of our enterprises. But moving to the hospitality space now, Rajiv wants to understand the 6-month outlook on Samhi hotels. Now, if you look at the last 1 year returns, the stock has seen about a 16% of a gain. Kush, coming to you on this one, what's your view? Is your view positive in this stock or not?
Well, not too optimistic. The reason being that if you look at some of its peers, they've had quite a bit of a run where this stock hasn't really been able to perform. So within the sector itself, if you see the relative strength isn't really there, in this stock. While it could get some benefit of the sectoral tailwind, but other than that, there isn't really much going for itself. Even if you see the kind of moves that it made towards the 200 mark and then kind of fizzled out, I would say this is perhaps an avoid right now. If he wants to stick to the hospitality space, then I would suggest two names. One is obviously the leader, which is Indian Hotels, which has had a stellar year, and even now it does look like a good buying opportunity. The other one is Lemon Tree. The stock's had a good run, mild profit booking, but the kind of trajectory that it is on, it could very well go ahead and hit 175 kind of levels. So my suggestion would be to either pick one of the two or divide the capital between the two of them, Indian Hotels and Lemon Tree.
Thank you, Kush, for that. The next question is from Gul, and he's asking whether at what price can Cipla be bought from a 1 year point of view. Kush, I'll come back to you. A 1 year outlook on Cipla, what would be the right price point to enter the position in the counter?
You see, the current price is actually not a bad one because it gives you a very clear stop loss on the downside, assuming so he's already given this outlook for about a year's time frame. Then 1400 is a good level where you can keep your stop loss. If you see, the November low has also been around that level only, which means the stock actually got that base in place. So 1400 being your positional stop, you could actually start looking at accumulation here as well. The pharma sector has been doing well. Even this stock has been attempting a move up. On the higher side, you're looking at targets of 1575. Once that is taken out, even a 1650 on the upside. So this base formation attempt in place, some recovery on the stock from lower levels makes it a good, interesting buy at this level as well. The stop loss, as I said, is at 1400.
Okay, so a positive view that we should be looking in terms of Cipla. Next, we have a caller joining us. I believe this is MS Prasad from Vizag joining us. Hi, Mr. Prasad. What can we help you with?
Yeah, madam. Good morning. I am holding Poonawalla 1200 piece at 400 rupees per piece. So, shall I hold, exit, or average?
Mr. Prasad, can you give us your rationale behind why you had invested in this particular stock? What's your outlook that you're looking for? Is it for a longer term that you're seeing or not?
Yeah, longer time, 1 to 2 years.
Okay. And okay, Neerav, I'll come to you for this one. He wants to understand the 1 to 2 year of an outlook for Poonawalla Fincorp, whether he should continue to hold on this one or sell.
Well, I think it's been facing certain headwinds as of now, and I think it would be better to shift to other alternatives like Geo Financial Services or Bajaj Housing Finance. I think these would be better alternatives.
Okay, so a sell on this counter. The next query we have is from Manoj, who's holding 3,000 shares of Dish TV at a price of 15 a piece, and he's asking whether he should hold or sell, currently facing a loss of 13,000 rupees. Kush, I'll come to you. Dish TV on the charts.
It's been a while since someone's inquired about this stock. Massive fall on this one. Barely any attempt of recovery. Any attempt being sold into at the 50-day moving average. I don't think this is one stock that you should continue to hold. I think this is a very clear exit from my side.
Okay, well, that was the view for Dish TV that we've seen it. Next, we have a caller joining, Yash from Mumbai. Hi, Yash. Can you state your query, please?
Yeah, I have Clean Science. I bought it at 1400 3 years ago. The stock hasn't done much. I want to know the future view.
Okay. And what was your rationale behind investing in this stock and staying in for such a longer period of time?
This stock selection, capital allocation, that's it.
Okay. Nirav, coming to you for this one, Clean Science. This he had bought it at a price of 1,400. Wants to understand the long-term view.
Well, the stock hasn't done much in terms of performance, so I think it's been a disappointment. So I think it will be better to liquidate the position and look for some better alternative. There are quite a few alternatives which are there available in the pharma space at very compelling valuations. So I think advice to exit the counter.
Got it. Let's move on to the next section of this edition of Ask Profit, and that is the rapid fire round. And I want to request Nirav and Yash just to keep your answers short so we can take as many of the queries that have been flowing in throughout the show. So we will talk about, I want quick answers, and let's just take the first one. It's from JM Dave from Rajkot. He's holding 15 shares in Newland at the price of 17,000. Kush, I'll come to you.
Newland Labs, is it right?
Yes, that is right.
Yes, keep a stop loss near the 13,200 mark and continue to hold.
Okay, got it. The next one is holding Spandana from, is this query from Vijay from Chennai, bought 110 at a price of 1,048. Nirav, your outlook on Spandana?
Sell.
A sell for Spandana. Next one is EFCIL. Karthik bought it at 675 rupees. Kush, I'll come to you for this. EFCIL.
Hold. The stop loss on this one is at 635.
Okay, stop loss at 635. The next query is on Moil and whether it could be bought at the current price for a long term. Nirav, the outlook on Moil?
Yes, very positive.
Okay. The next one is from Sunil. They have 25,000 promoter shares of Indraprastha Apollo Hospitals. Asking whether they should hold or sell for some more. Kush, I'll come to you.
I'm going to have to skip this query. I'm sorry.
Okay. Nirav, I'll come to you. Indraprastha Apollo Hospital.
Hold.
Okay, the next question is for Hitachi Energy. 22 shares bought at a price of 12,800. Nirav, I'll come to you. Outlook on Hitachi Energy. Hold for Hitachi Energy. The next stock that's focused on IRCTC and Kush, whether the right time to buy currently?
No, not yet. Hold up any purchases. Don't buy just yet.
Okay, not to buy for just yet. The next one is on we have from Tata Motors. Bought at 100 shares, purchased at a price of 834, sitting at a 10k loss. Nirav, your outlook for Tata Motors?
Exit.
Okay, exit for Tata Motors. The next one is Restaurant Brands Asia, also known as Burger King. 500 shares at a price of 106. The time horizon is 3 years. Nirav, what should an investor do?
Exit.
Okay, yeah. And with that, I'm sorry, but we're completely out of time. I want to thank Kush and Nirav for joining us today and helping our viewers with their queries. And thank you for joining in.
Thank you.
And viewers, I want to thank you all for watching. Do remember that we can get all your stock-related queries answered with our fundamental and technical analysis. We also have our Ask Profit show in the evening, and we'll be back same time as today, tomorrow. And me and Anushi would like to say goodbye on behalf of us and everyone who put this show together. And stay tuned to NDTV Profit. Lots more lined up on the other side.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Hello and welcome. You're watching KYC, which is Know Your Company. It's a brand new show on NDTV Profit. In this fast-paced world of stock markets, we are all, including investors, bombarded with information. But what we often lack is a deep and comprehensive understanding of specific companies and specific companies you invest in. We try to break each company down, right, to give the regular investor powerful, actionable insights into the fundamentals of single NSE listed company every day. So every day we do this, and this is of course a new show. Today we're going to zoom in on Royal Orchid Hotel. It's a sub 1,000 crore market cap company, but the hotels business in general has done very, very well through 2023 as well as 2024. This one was incorporated, as you can see, in 1986, and it was named Universal Resorts. Thereafter, it has now diversified. It also manages hotels under flagship brands, but it's largely also in the business of running hotels. So these are all the brands that they run as well as manage, and they currently have a portfolio of 109 plus hotels and resorts, and they boast 6,556 keys, and they are also ramping up fairly quickly in terms of expansion. Currently they are spread across 72 plus locations, and this is how their revenue split currently looks like. That's room revenue 57%, 34% coming from the food and beverages pocket. Then there is managed hotels, which is roughly 6.5% but growing fast, and then you have 2.5% which is other services. That's the larger split with regard to how revenue stacks up. In terms of how operational metrics are stacking up, let's look at some of them. In terms of average room rent, both for the existing brands as well as for the managed brands. And before I do that, let's quickly look at the parameters. One is you have operational metrics that we will look for. We look at various metrics from average room rent to occupancy, and try and gauge as to how and what's the kind of pattern that's coming out from there. We look at the revenue, income statement, margins, as well as profit after tax, how the growth has been. We'll do a quick balance sheet check. We'll do a cash flow check as well. We'll look at return ratios. Capex heavy businesses always, we focus in on the return ratio. The shareholding pattern, how much is owned by promoters. We'll also see what kind of returns the stock has given, and we'll also zoom in on what kind of coverage the stock has. To break all of this down, I have with me Anushi Vakharia, who tracks hotels and who tracks hotels quite closely. Anushi, first on operational metrics. I was just, before you came in, just speaking about how operational metrics have panned out. Your average room rent is just marginally reduced in FY24 versus H1 FY25 versus FY24. Give us perspective on what's happening there in your view.
Right, Harsh. So before we go to the income statement checks, it's very important to highlight some of the key operational measures that a hospitality business has. Three important figures if we have to see is obviously the occupancy levels, as that indicates how the hotel is performing, if there is demand scenario there or not. So average room rates, as you've mentioned, that in FY23 the rates were around 5,370 rupees, in FY24 5,673, and this has decreased to 5,141 rupees in this. But do note that a lot of the company's assets are under renovation and refurbishing, so it could be a result of that which we could be looking at, but definitely commentary on this would be awaited from the management side. This is from the joint ventures, leased and owned hotels that we are seeing. Even in the managed hotel side piece of business, if we look at the ARRs, the average room rates have remained similarly in the 3,700 mark to 4,000 of mark. So further growth from these levels is something that we should definitely be watching out for. If we look at the occupancy levels, occupancy, what was at 77% in FY23 is now at 70% in H1 of FY25. Similarly, in the managed business also, last two fiscals we've seen a 60% of an occupancy level, and in FY23 this figure stood at about 63%. But with that, let's move to the income statement. If we look at the revenue picture in FY23, FY24, we've seen the 264 crore of revenue in FY23, and in FY24, 294 crore of revenues. Margins, 31%, then which have decreased 26%, and we're looking at a 20% of a margin picture. But again, this is a result of two factors that we are seeing. One is increase in the cost. This translates to both the staff as well as wages and other renovation cost as well. Along with that, something that we should be pointing out is the change in the Indian accounting standards also, because of which we are looking at this change. Net profit, if we see, have seen about a 17 crore of a net profit, and in FY24, 17.7 crore of a net profit. In H1, this figure stood at about 16 crore. So a good growth in terms of net profit that we are seeing compared to the other metrics. But this is as well as the key operational metrics and the income statement check goes. But let's also talk about the balance sheet, Harsh. There's a lot of important space to cover there as well.
Yeah, absolutely. Because how is the company allocating capital? And let's look at, first off, shareholders' equity. it's a strong equity base for a sub 1,000 crore kind of company. So 200 crore in terms of equity shareholders funds. A large part, in fact 90% of this is profits which have been plowed back into the business. So just about 27 crore of pure play equity. The rest is all sitting in premium and reserves, and therefore looks fairly healthy. Look at the debt. That's really standing out for me. 84 crore of borrowing at the end of H1 FY25. No concern whatsoever, because it's a fairly healthy mix of debt and equity. In fact, debt is quite subdued to a large extent, and therefore this is looking fairly good in terms of how the balance sheet is stacking up. Let's look at the cash and bank balances. Well, 45 crore rupees of cash for a roughly 20 odd crore rupee profit business. Not bad at all, and compared to the debt as well, around 80 crore of debt, they've got a fairly healthy amount of cash which is sitting in books. So overall it looks like a very, very healthy balance sheet, well placed for growth, good opportunity to increase debt to grow, good opportunity in terms of utilizing cash to grow. Working capital needs seem to be well taken care of, but that's how the balance sheet is stacking up. Let's look at the cash flow as well very quickly. Now, cash flow from operations has come off slightly, and that's obviously because what Anushi said, there's plenty of maintenance happening in H1 FY25. What's the pipeline like for H2 will be key to understand there. Your net cash flow though has improved to a certain extent. So in that sense, there's a bit of improvement. But that's how cash flows are stacking up. You give it an even Steven kind of a rating on the cash flow front. The dividend yield is 0.7%. Not expecting too much, because it's a strong return, or it's a company which gives strong return ratios, and therefore dividends can be depressed for some time because you're getting a 20% plus kind of ROC, which we will come to. Anushi, why don't you, or rather let's look at the return ratios while we are at it. There you go. So look at the ROEs and the ROCs, how they're stacking up. The ROC is roughly 18% currently. The ROE is sitting at a healthy 25%, and therefore a depressed kind of dividend yield, not too bad. Return ratios definitely deserve a thumbs up because it's a 20% plus kind of return ratio business, or rather mid-teens to 20% kind of return ratios business, which is very solid for a hotels business. But Anushi, shareholding.
Harsh, no complaints there as well in terms of shareholding. If you are looking at promoters hold about 63.64% of the stake, while foreign institutions hold about 6.5% of stake. Coming to domestic institution, about 0.67% is what they have, and with the rest remaining stake is with the public, that is around 29% of mix. So a good mix in terms of shareholding that we are looking at. But let's also see how the company has performed with the kind of metrics, the balance sheet, the cash flow it has. How is the investor confidence in this company? In the last 6 months, we've not seen much of a movement in terms of stock price performance. We've in fact seen a 1% of a downtick. In 1 year, we've seen about 11% of an uptick in stock prices. But the last 5 years, it's the last 5 years which we've seen a very healthy number, around more than a 300% of gains in this company. So definitely in terms of the long-term perspective, the stock has awarded its return. While coming to the street coverage, we don't have a lot of analysts on the street covering this particular company. We just have one analyst, and their target price is around 431, which is again a 22% of an upside that we are looking at. So this is as far as the shareholding, the promoter confidence, the street performance, the investor, how they think about the company, and the analyst recommendation goes for Royal Orchid.
Okay, so that's how we're stacking up. Let's quickly summarize that in a nutshell first before we do a quick SWOT. There you go. Operational metrics flat. We did speak about this. H1 this year was slightly depressed. How quickly are we recovering in H2 is something that we'll have to look for. Income statement also flat because margins were slightly on the weaker side, even though profit growth was strong. Balance sheet looks very, very healthy. Cash flow, because of the income statement, largely impacted this time around and therefore flat. We'll have to wait and watch how that plays out. Let's quickly move to the next one. There you go. Return ratios, definitely a thumbs up, no doubt there. Shareholding, 63% has remained above 60 for a very long period of time, and therefore clearly a thumbs up. Street cred, it's given good returns, especially in the medium term for sure. Street coverage, there's just lack of it, frankly, even though Nuvama has a very positive, constructive note on it, 22% upside. But that's how the KYC rating stacks up. It's a 5.5 on 8, a very healthy one. But that may change a little bit depending on our interaction with the management. Before I go to management, I want to quickly look at the strengths, weaknesses, opportunities and threats. First off, on the strength side, it's got good brand presence. The room additions and the pipeline looks extremely strong. On the weaknesses, it's a smaller brand versus some of the bigger ones. Indian hotels, East India hotels, far stronger brands in that sense. And that's where it probably doesn't pack as much of a punch. Also on the size of the company, just 1,000 crore versus the kind of company size that some of the others are at. Margin pressures, temporary, likely, but at the moment that's a weakness which is sitting in that box. Let's look at opportunities as well. There's a large growth runway, right, Anushi? The hotels business these days has a very large runway. Why don't you take this over?
Especially after COVID, what we've seen in terms of travel, the revenge travel that we are seeing, it's been crazy for hospitality.
You've been traveling quite a bit.
You too, Harsh. So if we look at the opportunity side of the business, there's a long growth way that we are looking in terms of revenue for the company. Anticipation is of a 15% of an increase in terms of revenue. This is from the existing brands itself that we are seeing. Another good opportunity for the business is that now instead of volume, it's concentrating on its value offering. So this means that its focus is shifting towards its more premium offerings, which is catered towards the 5-star business. So again, a good set of ARR growth that we can see coming in for the company. We had pointed out in the beginning as well that ARR pickup is something that we should be watching out for in terms of management commentary as far as it goes. There's a lot of capacity additions also happening in terms of new pipeline coming into the picture, which could further aid the revenue growth for the company as well. In threats, if you look at this is more on the operational side of, or more on the industry side of threats that we are looking at. Firstly, hospitality as a business is cyclical in nature. So any kind of disturbance